Welcome back to Primary Source China Investment. This week we're on show N3. Peng Guo and I are here to discuss something that we've talked about in general a lot on this program, but we wanted to talk specifically about the market. And what does the market mean? If anybody were to ask, what did the market do today in the US? Most people would quote the S&P 500. Some people may still quote the Dow, others may quote the NASDAQ, but consensus on what the market is the S&P 500. And I'll ask it right to Peng Guo right off the bat. If I say, what did the market do in China today? What would you say?
It depends which market you are talking about.
Yeah, so we have a number of big indexes, right? We have the CSI 300, we have the Shanghai Composite, and then obviously there's Hong Kong. But the phenomenon that's been happening over the course of the last 18 months is that a lot of the big China tech names, the biggest brands, have been migrating from the US and dual listing back in Hong Kong. And we're talking about names that everybody knows. They're Alibaba, Meituan, JD.com, NetEase, right? All of these companies are not in the mainland index. So when we say, oh, what did the market do today? The market doesn't include these big household names.
That's the challenge. So I think back to the most fundamental question, what's the investable universe for the investor? So we probably, from an index design perspective, most of the time should starting from here. But in China, a lot of time, a historical reason, they design it based on the exchange. So Shanghai exchange design Shanghai, Shenzhen design Shenzhen, Hong Kong just care Hong Kong. Whatever listing there, they don't care too much about what's the real investable universe. And then after that, we let's pop up the CSI 300. There's many more indices in the market.
For passive investors just looking to allocate, in the US, you buy the S&P 500 and you hold it and you set it and forget it. The problem we have with China is if you buy the CSI 300, you're not getting any of these massive tech companies, and they are massive. I mean, just for example, Tencent, if it was listed on the mainland, would be the largest company on the mainland. It would be bigger than Maotai. It would be bigger than Ping An, and it's not counted in the major market index when we invest in China. So it's disingenuous to say, oh, I'm allocating to China, and I don't hold any of these big names, and I'm only holding either mainland names, or I'm only holding Shanghai names, not even.
Yeah, that's really painful. I know this is from history, this is a problem. I think that right now is still a problem. So investors have to figure out how to combine and organize those things by themselves.
Yeah, that's really ridiculous.
Hard.
Yeah, that's ridiculous. That's ridiculous, because if we just looked at the top 10 names in Hong Kong, the top 10 names on the mainland, they would be very little overlap.
That's true, and also from the sector's perspective, so some sector like the financial sector is huge, and other sectors market cap you can ignore it compared to the financial sector. So that's really hard to do the index investment. If you replicate them, that's pretty just overweight a few sectors.
Yeah, the Hang Seng index has a 26% exposure to technology, okay? None of those names in Hong Kong, remember. So in Hong Kong, there's 26% exposure in their Hang Seng index. And those names are Tencent, Alibaba, Meituan, JD, NetEase, Xiaomi, etc. None of those names are listed on the mainland. And if you look at the top 10 names on the mainland, there is a technology company, right? There's CATL, which is the big battery maker, and there's also a green energy company, which is in the top 10 holdings. But again, those companies are not necessarily what we think of as traditional tech. When it's not Alibaba, it's not Meituan, right? It's not NetEase. The traditional tech, or Baidu, which is listed in none of those areas. So
yeah,
go ahead.
Another challenge is probably like big companies they can cover many areas. So it's hard to put them into only one sector. So like the Tencent, or they probably can put many subsectors into it directly or indirectly to do it. They all mix each other. So expand to the different area. You have to carefully check their revenue came from, or even sometimes their plan. Like some new companies move to the new energy area, so they don't have any experience before to doing like that. How can you trade the kind of things into the index? That's a lot of the new challenges, I think, for the index design.
You see on the mainland the Yangtze Power. That's a huge company. It's a large SOE. So another layer to this is a lot of the biggest firms listed in the Shanghai Composite and the CSI 300 are really state-owned enterprises still. A lot of these big names are state-owned enterprises, which is very different than in Hong Kong. The other issue is the financial services companies, right? On the mainland, there's financial services companies in the top 10. I mentioned Ping An earlier, but there's also China Merchants and Industrial Bank. In Hong Kong, in the top 10, there are financial services companies, but they're different. So it's China Commercial Bank, AIA, and HSBC. So these are very, very different financial services companies and have very different return profile. So I think the message here is getting market exposure to China is very, very difficult, but it offers a huge opportunity. I'm not saying for consultants and advisors, but maybe for an index provider to solve this issue, particularly for foreign investors.
That's true. So that's definitely for the professional investors, they definitely need a good help from the index design perspective. Like the Hang Seng, they just moved like the 8 real estate companies from the index immediately after the recent bankrupt of the sector.
Correct, because a lot of them were listed in Hong Kong.
Another natural weakness of the emerging market is due to the high volatility. So most of the investors, they have no capability to handle such kind of volatility. From the A-share market history, they used to be like the large cap and the small cap. For example, like the 4 or 5 years, small cap have the good performance and the large cap pretty weak. And then like the 1 or 2 years, large cap get outstanding performance and the small cap get no return or either negative performance. So you really, a big bet is firstly would be the large cap and the small cap. But right now it seems like the large cap taking more and more advantages compared with the small cap. So that really means the history performance or back testing won't be very helpful for the investors.
Yeah, that's a big problem. I mean, there's 2 things that I wanted to stress when what you just said. The sector allocation on the mainland is changing a lot. If you just go back 10 years, financial services was like 40% of the index, and now it's a much lower percentage of the index. And that's not necessarily because financial service companies have collapsed earning. It's because other companies have grown as well. You have
that's true.
A lot of growth in companies like Maotai and companies like CATL. The final piece I wanted to talk about is the divergence in returns. If you look at from a historical basis, 5 years. Let's just look 5 years. The annual return for CSI 300 is about 3.9%. So 3.9. Shanghai Composite is about 0.8, so less than 1%. This is 5-year return, annualized return. Hong Kong, Hang Seng Index, down 14%, 5-year return. And I put this K-Web up just as a guideline because remember, 5 years ago, all these tech companies were listed in the US. So K-Web over 5 years is 2.74%. And for those of you in the know, K-Web follows this CSI Overseas Index. And I mean, what overseas is going to mean? They probably have to change the name of Overseas Index going forward. But that's a political issue. I don't even want to talk about that. But I think the message here is, for Zhonghan, Peng Guo, there's opportunity to create a new index. I really feel like there's opportunity here.
Yeah, that's true. So there's many different ways to create the value. Let's see.
Yeah. Well, we'll leave it there for show N3. Thanks for tuning in, and we'll see you next week.
Thank you.